AI is the future. No one is disputing that. But what almost no one is talking about is how that future is actually being built. Because right now, the biggest tech companies in the world are spending hundreds of billions of dollars on AI, and in many cases, they're spending money faster than they can actually make money from it. And at the center of all of this is OpenAI, a company valued in the hundreds of billions of dollars while losing massive amounts of money every single year. And to keep building, a lot of these tech companies are starting to fund each other in a way that looks a lot less like normal growth and a lot more like financial engineering, where the same money just keeps moving in a loop to keep the system going. And that raises a bigger question. Are we actually building the future of technology, or are we inflating one of the largest bubbles we've ever seen since the dot-com era? What makes this situation so unusual is the scale of spending. Because the biggest tech companies like Facebook, Apple, Google, Nvidia, they're not just investing in AI, they're pouring hundreds of billions of dollars into it at a pace we've never really seen before. And a huge portion of that isn't going into software. It's going into physical infrastructure like chips, data centers, power, cooling, things that are extremely expensive and take years to build. And the shift here is important because historically, these companies were incredibly efficient. They generated massive amounts of profits without needing to spend a lot of capital. But AI flips that model completely. Now, they're spending a much larger share of their revenue just to keep up. And in many cases, they're taking on debt to fund it, which is why you're starting to see cash flow get squeezed across the entire sector. And that creates a real problem because all of the spending is happening before anyone really knows what the actual return is going to be. So you end up in a situation where massive amounts of capital are being deployed into something that hasn't proven it could pay for itself yet. And that brings us to valuations, because this is where things start to look weird. On the surface, the market doesn't look completely irrational. The biggest tech companies are expensive, but still somewhat grounded in reality based on their size and growth. But when you look at private AI companies, that's where things start to break down. Because you have companies like OpenAI who are worth almost $1 trillion while still losing around $14 billion a year. And they're expected to lose up to $100 billion before they're ever profitable. And the entire bet is that at some point in the future, they'll generate enormous amounts of revenue to justify all of the spending. But the scale of what they need to earn is insane, not just to grow, but to make the numbers work on the infrastructure they're building. And that's where the risk comes in. Because it's not that these companies can't succeed, it's that the expectations being priced in require near perfect execution in an extremely competitive market. And when expectations get that high, even small disappointments can cause massive repricing. And all of this raises the bigger question. Is any of this actually working yet? Because despite all of the spending, the returns are still very unclear. Most companies investing in AI aren't seeing meaningful improvements in productivity or profits, at least not yet. And this is creating a huge gap between what's being spent and what's actually being generated in return. And even at the center of all of this, companies like OpenAI are still losing large amounts of money while facing increasing competition like Claude, Gemini, or DeepSeek. So you end up in a situation where the entire industry is investing aggressively based on what AI could become, not what it's actually producing today. And that's where things start to get risky, because when expectations get too far ahead of reality and people start believing that things could never fail, that's when you start to see bubbles forming. And you have to remember too that just because you believe a certain technology is going to be the future, it doesn't mean that lets you know which business using that technology is going to be successful. Those are two separate things. Imagine I took you back to the 1890s and I gave you $1 million to invest. And you know for a fact that cars are the future of transport. So you think, I'll invest in some car companies and I'll be successful. Well, from the 1900s to 1920, there were roughly 3,000 car companies. And by the mid-20s, only 44 survived. So the odds you'd pick the right company were extremely low. So remember, the technology of AI can 100% be the future, but that's not the same thing as picking which company will be successful. Now, where a lot of investors are starting to get concerned is how these AI companies are spending capital. Because the spending isn't just happening independently, it's happening in a loop, where the same money keeps moving between the same companies. You're seeing chip makers like Nvidia and cloud providers like Microsoft or Amazon invest billions into AI companies, and then those AI companies turn around and spend that money right back on chips, cloud infrastructure, and data centers from the same companies that funded them. So for example, Microsoft invested billions into OpenAI. OpenAI spends massive amounts of money on Microsoft's cloud services. So Microsoft's investment turns into future revenue for Microsoft. And on paper, it looks like real growth. Revenue is going up, demand looks strong, but a lot of that demand is being funded by the system itself, not by independent outside customers. And that's the problem, because it starts to blur the line between actual demand and financial engineering. And we've seen this before. During the dot-com bubble, companies would finance their own customers just to keep revenue growing. And it worked until it didn't. Because once the flow of money slowed down, you started to see how a lot of businesses couldn't exist without cheap money. To give you an example on how much of the system is quite fragile and built on high expectations, in early 2026, a relatively unknown Chinese company called DeepSeek released an AI model that they claimed could compete with top models at a fraction of the cost. And whether those claims were fully accurate or not, it didn't really matter because the market reaction was immediate. Nvidia dropped billions of dollars in a single day, hundreds of billions of dollars disappeared across tech, and it was all from one announcement. And even though the panic faded and prices recovered, the biggest takeaway is what it revealed, which is that the entire system is priced on very high expectations. And when those expectations are that high, it doesn't take much to shake confidence. And that's where things become unstable. Because if confidence starts to crack, even slightly, it can force a much larger repricing across the entire space. So the biggest question is this another dot-com bubble? The answer is not exactly, but it's also not completely different. Because on one hand, this isn't just hype with nothing behind it. The technology is real. Companies are using it, and there are already businesses generating serious revenue from it, which makes it very different from the late 90s, where a lot of dot-com companies didn't even have a working product and they were outrageously valued. Even for how unprofitable OpenAI is, almost everyone I know uses ChatGPT or Claude or some type of AI every single day. But at the same time, that doesn't mean everything happening around it is rational. Because when you look at certain valuations, the level of spending, and especially the way some of this growth is being funded, parts of the market start to look very similar to past bubbles where expectations get pushed so high that they become difficult to actually live up to. So the reality is, it's not one or the other, it's both at the same time. The AI boom itself is real, but within that boom, there are pockets where things have clearly gotten ahead of themselves. And when that happens, the question isn't whether the technology survives. We all know AI is going to be a major part of the future. The real question is, which companies actually make it out on the other side?